Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. It's the 8th of August 2023 and these are the top stories for the day. Is India Inc.'s recovery too lopsided? Should India relax regulations for biosimilar products? Will prices of oil and precious metals sustain their strength? And what is a room temperature superconductor? Most of the corporate results for the first quarter of financial year 2024 are out now. The combined net profit of 983 companies that Business Standard analyzed has soared by over 64% year on year. Impressive, isn't it? But a closer examination suggests that all is not well. Most of the incremental growth was led by a bunch of companies, and the revenue growth rose by just 7% in the first quarter year on year. In today's first segment, Abhijit Kumar finds out if India Inc.'s recovery is lopsided.
A business standard analysis of 983 listed companies which have declared their results for the first quarter of financial year 2023 has thrown up some interesting numbers. The net profit of these companies in the April to June period jumped by 64.7% year on year to a high of 2.68 trillion rupees. While the net profit looks impressive, a look at the sales numbers tell a different story. The combined net sales of all these companies were up just 7.3% year on year in the said quarter. This is the lowest growth in the past 10 quarters. And the growth in earnings remained lopsided because most of the incremental gains come from a handful of companies.
Obviously, there are certain sectors that benefited from the post-COVID recovery. Two, from the China plus one kind of a strategy. Two is obviously domestic consumption is also chemicals, pharma, etc. are muted. I would say chemicals largely because China has also recovered post-COVID and China is supplying globally. Metals and commodity prices are also cyclical and sort of had a peak in 21-22. Offtake of credit, of course, is very high. So small finance banks, banks in general, if you see even a company like HDFC Bank is declaring almost a 20-25% increase in credit offtake. So it's varied industries have varied, I would say, outlook.
If you look at the performance of the various sector over the historical data point, it always has been like few factors marginally outperform the other sectors. So that's quite normal to expect for. Even if you compare the same sector performance across the globe in the other emerging countries or other developed countries, the growth always varies for.
Except banking, finance and automotive sector, most other reported a slowdown in top-line growth in the June quarter. In the business standard sample, listed companies added 1.05 trillion rupees to their combined net profit in Q1 FY24, but nearly two-thirds of this growth came from only 5 companies. 3 of these companies are government-owned oil marketing giants, Bharat Petroleum Corporation, Hindustan Petroleum and Indian Oil Corporation. State Bank of India and Tata Motors were 4th and 5th biggest contributors to the overall earnings. Barring these 5 companies, the combined net profit of the rest of the sample companies was up 20.4% year on year in Q1 FY24, a slowdown from 23.6% YOY from Q1 FY23. But if we remove the automotive companies from the sample, this net profit growth falls to just 7.3%. Meanwhile, there has been a divergence between yearly and quarterly growth of the companies. The Q1 FY24 net profit of India Inc. remained nearly stagnant as compared to the previous Q4 FY23. The first quarter net profit stood at 2,67,460.9 crore rupees as compared to the 2,66,607.2 crore rupees last quarter, a mere 0.32% increase. So, what does this gap between the year-on-year performance and quarter-on-quarter performance indicate?
Definitely, year on year, if you go back 1 year ago, 2022, I think we were just coming out of COVID. 2021 was brutal as far as COVID is concerned. So 21-22 as a financial year would have been fairly muted. So 22-23 definitely is a huge increase compared to the lower base of 21-22. But quarter on quarter now, of course, it's fairly muted. Growth must have tapered off because in 21-22 the base was low. But now, of course, the growth is sort of matured. In some sectors, it may be worthwhile to look at 22-23 results in comparison to 19-20 results pre-COVID.
Moreover, despite signs of economic recovery, collections from the corporate tax declined nearly 14% year-on-year to 1.38 trillion rupees from 1.61 trillion rupees last year. So the question arises that when Q1 profits have surged 65% YOY, why have corporate tax earnings of the government declined in the same period?
While the business is showing growth, the collections could have been gone down because there have been certain transactions which have not been liable to TDS. There are certain transactions, particularly the corporate tax rate has gone down, and many of the companies are now opting under the new scheme where it is 22% corporate tax rate plus the surcharge and cesses. So as opposed to what was earlier 25% plus surcharge cesses. A lot of companies are driving the growth by doing a lot of big capital, and they would have planned some more capital investments, higher depreciation they would have planned as a claim. And effectively, their corporate tax collections will go down accordingly. In fact, some of the companies are setting up a new manufacturing entities, units, where the rate of corporate tax is only 15% plus surcharge and cess.
Going forward, as the major global economies stare at slowdown, India too cannot remain unaffected. There are challenges on the domestic front too. While some sectors are doing well, it remains to be seen how the others will tide over the ongoing slowdown.
Early bird results from the pharma sector are not impressive either. Sun Pharmaceutical has reported about 2% year-on-year drop in consolidated net profit in the first quarter of FY24. Meanwhile, in the realm of pharmaceuticals, biosimilar products have emerged as potential game changers. They hold promise for millions of people suffering from serious ailments, especially for the poor. Recently, civil society groups urged the government to revise India's biosimilar guidelines so that quality drugs are available at affordable prices. Abhijit Kumar has more on this.
Biological products or biologics have emerged as the most effective way to treat serious illnesses and conditions like cancer, kidney diseases, diabetes, and many others. They are complex, large molecule drugs created from living organisms. The World Health Organization describes biological products as a diverse group of medicines which includes vaccines, growth factors, immune modulators, monoclonal antibodies, as well as products derived from human blood and plasma. They are a class of medicines which are grown and then purified from large-scale cultures of bacteria or yeast or plant or animal cells. In contrast, most conventional drugs are chemically synthesized and their structure is simple and known. Biosimilars, on the other hand, are highly similar versions of these biologics without meaningful differences in terms of safety, purity, and potency to the original drug. They aim to replicate the therapeutic effects of the biologics while being more affordable. In India, a humble letter recently sparked biologics versus biosimilar debate. Several pharma companies, patient groups, and civil society groups have asked the Health Ministry to relax the biosimilar guidelines 2016 related to testing and manufacturing of biosimilars in India to ensure that the treatment is affordable. In the letter, they said that a committee should work on a new set of norms without any outside influence. On the other hand, multinational pharmaceutical companies, doctors, and a few independent voices have said there is no sense in making biosimilars without the regulatory rigor. They have asked what is the use of an affordable medicine which cannot treat or worse, causes a side effect. So what makes biosimilar products cheaper than original biologics?
They rely on innovator companies to already have completed the R&D for discovery of the biologic itself and the therapeutic use for it. The role of the biosimilar company will then be to find a comparator and accordingly use the comparator for the same purpose. So in the regulatory pathway as well, the entire compliance requirements are become a lot easier for the biosimilar company, because the requirement for them also is to make sure that they are able to show the equivalence to the reference product, which is the innovator company's product. So therefore, overall, the cost for discovery plus compliance in order to put it into the market is lower.
The United States and European nations have established their regulatory pathways for biosimilars. The UK regulator Medicines and Healthcare Products Regulatory Agency waived both animal studies and comparative efficacy trials for the approval of biosimilars in the updated guidelines in 2022. In 2022, the US Food and Drugs Authority had also removed animal testing as part of the process to obtain a license for biosimilar or biological product. However, wherever animal testing rules have been relaxed, other conditions are imposed to ensure that quality is not compromised. So should India also follow the suit and relax regulations for biosimilar products?
I don't believe that the guidelines for biosimilars should be relaxed. These are biologic products which have a different manufacturing process when compared to the innovator products. And the biosimilar guidelines today are only requiring that you show that equivalence with your own biologic with that of the reference product.
But various patient groups demand that the regulations should be eased.
If you want an affordable product, this is the only way. And therefore, we come up with this, right? And here again, we are creating barriers. So, see, it is very easy to create a barrier and say no. But what is important is to look at it in a way that can we do something about it? If we have something very similar, very close to the original product, why not have a look at it in a way that this could work at a cheaper rate, right? And can we get away with the repetitive non-value adding activities from this approval process and just focus on the patient safety and efficacy of the product?
Can the government play a role in bringing down the prices of original biologic products?
We've all been talking to the Department of Pharmaceuticals and, the drug price control order. The drug price control order actually excludes monopoly drugs from coming under drug price control. How do you control the prices of monopoly drugs if you keep them out of drug price?
Streamline the taxation part, the first step towards affordability. Please get your taxes from other luxury, leisure things, not from life-saving things.
As we navigate the complex terrain of biologics, the future of affordable healthcare hinges on finding the right balance between innovation, patient safety, and government policy. However, the risk of compromising safety and efficacy cannot be overlooked.
Even as efforts are on to put a check on the rising cost of healthcare, there's no stopping the soaring oil prices. They've been on an upward trend for 6 straight weeks and are now hovering at 4-month highs amid supply cuts. Other commodities like gold and silver too have been firm. So what is next for oil and precious metals? Will the strength sustain? Lopsided explores in this report.
Hopes of interest rates tapering off and a resilient US economy have led to a renewed surge in oil prices recently. Over the past 1 month, prices of Brent crude and WTI crude have jumped up to 15% to $86 per barrel and $82 per barrel respectively, scaling their highest levels since mid-April. Add to this, top exporter Saudi Arabia has extended the oil output cut of 1 million barrels per day for September, while Russia will also cut oil exports by 300,000 barrels per day for the month. Analysts believe this will keep oil prices simmering in the near term.
This sharp increase has been primarily because of the voluntary cuts that Saudi Arabia and Russia has taken. And in fact, if you look at the outlook also, Saudi Arabia intends to extend that cut by another month odd. And Russia has also today said that it might be cutting down on the exports by 300,000 barrel per day in September as well. So these are the reasons because of which we expect that crude oil prices might stay high, and the likelihood of going to $90 per barrel is pretty high for Brent.
Analysts at Goldman Sachs too see Brent rising up to $93 per barrel by the second half of 2024 as market deficit swells. Precious metals like gold and silver have also been firm during the past month, rising 3% on the MCX on healthy demand and a softer dollar. Though after taking a hit last week on rating agency Fitch's US Treasury downgrade, the near-term outlook for the two commodities hinges on the key US inflation data this week. Meanwhile, technical charts signal a positive bias ahead.
The overall bias remains positive and MCX gold futures can rally to rupees 64,000 mark by December. Presently, gold futures are seen trading in a band of rupees 58,300 to rupees 59,900. In the near term, rupees 59,900 is the key resistance for gold, above which prices can spurt to rupees 61,000. On the downside, near support is visible at rupees 58,700. Meanwhile, silver September futures are expected to trade in a band of rupees 69,400 to 77,250. Immediate support for silver futures is seen at rupees 71,250, whereas the commodity can face resistance at rupees 74,250.
Overall, investors will be eyeing a steady decline in the US consumer prices and lowering of interest rates that could keep oil, gold, and silver prices steady ahead. On Tuesday, August 8th, Global Q's and India Inc.'s June quarter earnings will dictate market trends.
He's making plans for an early retirement. Business Standard.
After oil, let us move on to a subject which rarely makes news. That is solid-state physics. At the fag end of July, a group of South Korean scientists claimed they had developed a lead-based compound which displayed superconducting properties at room temperature and normal pressure conditions. The claims led to unprecedented excitement in the scientific community. But what is a room temperature superconductor and why is this claim making news? Boris Pradhan explains.
A superconductor is a material that conducts electricity with almost 100% efficiency. This means that any form of energy loss is prevented. Superconductivity can be achieved only under extremely low temperatures or high pressure conditions. The temperature at which the resistance drops to zero is known as the critical temperature. But what if there was a superconductor that did this at room temperature? Till now, the search for such a material had proved elusive. This is the reason the claims by the South Korean scientists regarding LK99 have made the scientific world sit up. Superconductor technology like LK99 could lead to a new age of frictionless high-speed trains, lossless power lines, and super-efficient quantum computers. Particle accelerators and nuclear fusion devices could also be run in a cost-efficient manner. Superconducting materials are already in use in a variety of applications around the world, such as MRI machines. But they require extremely low temperatures or extremely high pressures. Such conditions are difficult and expensive to maintain. Since the electric current flowing through metal wires suffers losses due to the wire's electrical resistance, a significant amount of electricity is lost in transmission. The challenge before scientists have been to discover a material that can conduct electricity without resistance at an ordinary temperature and pressure. Such superconducting materials were first discovered in 1911. Dutch physicist Heike Kamerlingh Onnes found that mercury, a liquid metal at room temperature, becomes a superconductor at an extremely cold temperature of minus 268.95 degrees Celsius. Researchers also realized that along with being perfect conductors of electricity, superconductors also have many other properties that could lead to monumental breakthroughs in the fields of energy, transportation, and computers. Scientists have expressed doubts about the claims of the South Korean researchers, though. The research paper is waiting to be peer-reviewed for publication. Scientists also say that their findings have not been put through basic tests used to confirm superconductivity. Similar claims of room temperature superconductivity have been met with skepticism, as none of them has been able to withstand rigorous scientific scrutiny. In July, Physical Review Letters, a prominent scientific journal, decided to retract a paper by Ranga Dias, a physicist at the University of Rochester, because of faulty data.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Experts say that if the claim turned out to be true, it would be one of the biggest discoveries in physics in the past few decades. But that's all for today. Catch the next episode of The Morning Show tomorrow. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.